I'm Angela Polson, staff writer for Modern Distribution Management, and today I'm speaking with David Parks, Executive Vice President of Hydradyne. Hydradyne is a fluid power repair, service, and distribution company based in the Dallas-Fort Worth area in Texas. Hi, David. Welcome to the program.
Well, hello, and how are you?
I'm doing well, thanks. In general, how's business been at Hydradyne?
Well, our business in the first quarter has been flat over last year, and that's been primarily due to the slow market in the oil field OEM sector, which is actually our largest business sector.
What's the outlook for the rest of the year?
Well, we expect moderate growth continuing through the entire 2013. So I would say something in the mid-range single digits growth.
Okay. Are there any end markets where you're seeing or experiencing particular strength this year?
The strongest market we're participating in is in the automotive industry. And we do a lot of business in the automotive industry, particularly on the East Coast.
Great. Are there any other areas where you're seeing strength?
Well, we're beginning to see the return of the housing industry, so we're expecting to see continued growth in the wood products industry and the other related industries to housing. We're already getting calls from people in that industry that are starting to run new shifts and starting to look at increasing production.
What trends are currently driving your sector or your markets? Have conditions shifted?
Well, we're in an awful lot of different markets because we're in fluid power, meaning that there's just virtually every industry has fluid power. But as we were talking about, we're seeing some trends that what I guess I would call are almost traditional trends, in the sense that automotive is coming back. There's a lot of old cars, let's say, on the road, and people are buying cars. And when you start looking at the numbers, the housing market is improving. Housing prices are rising, and the building contractors are getting orders. There's still some spots around the country where they're not doing real well, but if you look in the Dallas-Fort Worth area here, houses are pretty much flying off the shelf, quite frankly. And all of this tends to bring about what I guess I would call a more traditional industrial state, meaning that people building homes and driving cars are beginning to drive the economy, and not just necessarily commodities is what was driving the economy for the past few years. So when we talk about looking forward to trends, some of the things I see out there is, for example, here we've been a victim of our own success in the fact that you've probably been reading about all the natural gas that's been found. What people haven't really been focusing on is right now that actually the natural gas business is fairly well off because they found so much of it. What's in the process of beginning to take place is all those people who benefit from cheap energy. So for an example, right now, even though gas is at $4 today, that same gas is selling for $13 in Japan. It's selling for $10 or $11 in China. The United States is really on the brink of having the ability to be the low energy supplier for an industrialized nation in the world. And that's going to have impacts all across the industrial landscape. So while a lot of people are focusing on the fact that there's all this money has been spent in the last few years on developing shale gas, it hasn't been so much focus based upon who's going to actually benefit from that gas.
Which growth industries is Hydradyne targeting in 2013?
Well, the biggest initiatives we have are to work with the automotive industry, which is expanding now in looking at their first and second tier suppliers.
This next question is something we ask everyone we feature in this segment, which is, what keeps you awake at night? So in other words, what things do you think distribution executives should be keeping front of mind right now?
You know, I thought about that, and I could tell you about 10 things, but I would say that the things that we're looking at right now are streamlining operations, trying to increase productivity. So particularly when the segments are growing a little bit slower, it's a good time for us to be looking at our operations and trying to figure out how we can do more with less resources. Some of the things that we are doing, obviously, it's some of the traditional things, such as managing our inventory, but we're also looking at we're in the process of initiating a visual metrics for all of our employees and all of their departments, where we can measure various things such as on-time deliveries, productivity measurements, and put these out there visually for our employees, and then have operational meetings around these visual metrics. Quite frankly, our goal is to try to get every single person in the company understanding what's driving their position, what key factors measure their productivity, and get everybody working on increasing productivity.
That's all the questions I have for you. Thanks for joining me.
All right, thank you.